Nigeria to attract $48 billion of $194 billion oil investments in Africa. Federal government to strengthen economic diversification policy in the second term of present administration. Nigeria records 57.1 Purchasing Managers Index points in February, plus domestic flight operations rise by 23% in 2018. Details of these and more on this edition of Business Express on the network service of the NTA. I am Muplang Takok. Good to know you're still there. Nigeria will attract $48.04 billion of 24.8% of an estimated $194 billion total oil and gas investment slated to be made in Africa within the next 7 years. The Nigerian National Petroleum Corporation (NNPC), which stated this, noted that the country's closest rival on the continent, Angola, will take 11.3% of the total expected spend, while emerging jurisdiction Mozambique will have as much as 23.8% of the $194 billion investment. Group Managing Director of NNPC, Mekanti Baru, at the 2019 edition of the International Petroleum Week in London, added that within its investment window, the country would account for 20 out of the 93 projects to be funded across the continent's oil and gas industry. Meanwhile, oil-producing group OPEC says it is responsible for salvaging the entire oil industry with its deal to curb output, though the U.S. shale revolution has helped to prevent major energy chaos in the world. OPEC Secretary General Mohammed Barkindo says OPEC has been doing a great service to producers and global oil markets, adding that the decision that OPEC took, together with non-OPEC partners, literally rescued the industry from total collapse. And the Central Bank of Nigeria's Manufacturing Purchasing Managers Index (PMI) stood at 57.1 index points as at February, indicating an expansion in the manufacturing sector for 23 consecutive months. The CBN, in its monthly PMI survey, indicates that the index grew at a slower rate when compared to 58.5 index points recorded in February. 13 out of the 14 sub-sectors assessed reported growth in the month. They include petroleum and coal products, electrical equipment, transportation equipment, plastics and rubber products, food, beverage and tobacco products. Statisticians from ECOWAS member states converged on Abuja with a view to ultimately increasing electricity production and availability in the sub-region. This, they say, will be driven by viable data collected and evaluated by energy statisticians. The report. It is an established fact that Africa is blessed with abundant fossil and renewable energy sources, but countries in the West African sub-region are suffering from electricity deficit. This is attributed to non-utilization of renewable energy sources. Now that governments are working to increase contribution of these sources to the energy mix, experts and partners in that sector are brainstorming on how to improve the availability and quality of statistics on renewable energy, which they say is a prerequisite to solving energy challenges.
Network and consolidate the existing regional platforms and programs whose success lies on comprehensive and accurate energy information.
And also in order to meet our national commitment to global obligations to climate change mitigation. It should also be, that is, the infrastructure should be private sector driven.
The use of ICT for data management as well as good data culture is being emphasized at the training.
If data is made available as much as it should be, I think it should create a much more avenue for regional development.
There is optimism here that implementation of the outcomes from the training will position the sub-region in intra-African trade and the planned single market agenda. The economy is said to be intertwined with the polity of every society. In Nigeria, the build-up to the general election saw investors take a hawkish position to stocks. Amina Nujem in this report takes a look at how the market performed in February.
Market appreciated by 3.8% in February compared with a decline in January. The Nigerian Stock Exchange OSHA index rose above the 31,000 basis point, while market capitalization gained 434 billion naira. The market had recorded a decline in January as general election jitters kept most investors away. Investors increased their patronage in February as they anticipated the release of corporate results for the year 2018. The growth would have been high, but for the decline recorded in the last 2 days of the month after the result of the presidential election was announced and President Muhammadu Buhari declared the winner. The NSE OSHA index appreciated to a high of 32,700.12, while market capitalization rose to 12.194 trillion naira on Monday. However, the NSE ASI closed the month at 31,721.76, while market capitalization ended at 11.829 trillion naira. The market recorded the highest decline of 1.63% Thursday, which was the last day of the month. Market operators are optimistic that the market would perform better in the second half of 2019.
Yishau Aliu, an economist, joins us to discuss impact of the election outcome on the economy as well as strategies for repositioning of the economy. You're welcome to the program.
Thank you very much.
Okay, the election, the wait for the results and all. How did the financial markets react?
Obviously, in judging some of this point, you have to look backward in 2015 when the same election was announced. Stock exchange in 2015 recorded the highest gain in 50 years as a result of confidence which the Nigerian population has, including the international economy, when Buhari was declared the winner in 2015. But it's not the same situation in 2019 for many reasons. One is that there is problem with the slowdown of economic activity around the globe. That is one. Two, there is also a lot of political tension and electioneering process. Three, there is also a lot of question as far as political stability is concerned. So the market definitely, because it's a long term, it's a market that always forecasts higher than necessary. What I mean by higher than necessary is that it's the market that has a long range focus. So anytime there is an activity in a political activity, the market will sit quietly and look at the potential of that economic situation. So because also it's a market where all the investment that are taking place are for long-term gains, and that's why in most cases the market is very cautious of current situation because they are looking into the future.
Okay, so you heard from the reports from Amina, the performance of the market, the capital market in February. What would you say is the current status of the market?
The market will continue to experience a slow process as far as the situation is concerned, because investors are investing not just because they want to invest, but they're investing first to guarantee their investment. Second is to see how they can reap more profit and then stay in the market for sustainability. So the market will continue to behave in that direction until a right atmosphere for the investors to come is right. That is the situation in the market. And however, there is also one contending issue. There is a role to be played by the market itself, and there is role to be played by the players themselves in the market, and there is also a role by which politicians or those at the helm of affairs can play for this market to continue to make gain. But so far as the situation is contestable, the situation is not satisfactorily to the investors, investors will always shy away, because you need to sustain the people or the investors in the market, and you also need to bring new investors into the market. And when new investors are coming into the market, is what makes the market to consider that there is a lot of push factors, and therefore the market will respond appropriately.
Okay, so we've been talking mostly about the capital market. Can we talk about the economy as a whole? What did you see play out in the last few days before the elections, before the results were announced, and even when they were announced?
There is a lot of economic loss that were made, and at the same time there are some economic gains, though the gains are not up to the loss made in the economy. You know, when electioneering is mentioned, electioneering is coming with a lot of potentials, issues that concern those who are going to be the players in the economy, those who are going to depend on the economy, and at the same time those who are expecting that if the economy grows, that there is a likely outcome that they will have something out of that economy. The situation is not favorable to Nigerian economy for many factors. One is that we have seen how the behaviors of our foreign exchange, we have seen also the behaviors of our local market, we have also seen the behavior of potential consumers who are going into the market. Let me give you a good example. Small businesses in most cases are grossly affected by electioneering process for many reasons. One is that every owner of potential business is also a potential voter. So therefore, the time he is going to use, the human time, the labor that is going to put into to make sure that he has participated in the election must disturb his own business. Meanwhile, you find a situation where business operators operating in Lagos has to travel as far as Akwa Ibom. Some will travel from Lagos to Sokoto, abandoning their production site. So that disturbance alone means a loss to them. And when you put the aggregate function and you take the multiplier implication of all this, it will still bounce back to the economy. However, it is clear that the economy has made so much of loss for many reasons. One, the postponement of the election. Two, the delay in even announcing the result. Now, three, with the likelihood of what is going to happen in the court process. All this is affecting the economy. So many people are now still out of their own business operations for many reasons. One, they want to see what is going to be the outcome of gubernatorial. Two, they want to see the what is going to happen between the contenders and the winners.
So do we have any reason to be optimistic in the coming months?
Oh, the only reason is that to building confidence, there is need for the stakeholders to build confidence, because in a situation like this, investors or operators, naturally, they are not on their own. They are just waiting for the factors that brought those minuses into the economy to change. That is one. We are expecting the winners how to accommodate losers, and also the losers how to accommodate winners. This is going to bring more confidence to the business operators and at the same time the market itself.
Okay, so there has been a slowdown in treasury bills and the bond market. Can you speak about that?
You know, government came with a lot of policies, especially since President Muhammadu Buhari presented the 2019 appropriation bill to the National Assembly, in which he has mentioned issues of that nature. It is true that government want to settle a lot of liabilities in the domestic economy so as to put more injection, but at the same time, government is also trying to refinance this instrument by going into international market to get facilities. So this has triggered a lot of issues as far as bond market within the domestic economy is concerned.
Okay, so in all this, the foreign exchange market remained stable. Did it insulate itself from what was witnessed from other markets?
It has been stable for quite a long time, and that stability has to do with the role played by the Central Bank of Nigeria. Remember that the Central Bank was able to maintain some corridors and windows in trying to put the exchange at a stable situation. The market was distorted during the election, but it has to be distorted because there are foreign, or sometimes we call it errands money, that is coming into the economy. It has to distort the foreign exchange, but is in the short while, and in the long run, if the central bank was still going to maintain the tempo, we are expecting the exchange rate to be stable. And meanwhile, it is also advised that the rate at which we are exchanging naira to dollar is still high, looking at other facilities that is coming from the yuan. Remember, there is Chinese swap with the Nigerian currency, and we're expecting that also to affect the exchange rate.
Okay, so what should be the immediate steps to be taken so that investor confidence can be restored? You talked about it, but let's talk about what should be done.
There are roles to be played by government, there are roles to be played by the players themselves, there are roles also to be played by politicians. From the government side, there is need to bring friendly policies that will maintain those who are existing in the market, and at the same time welcome others who are willing to invest in the economy. And that has to do a lot with our foreign policy, with ease of doing business, and including the economic recovery and growth plan of the government is going to play a greater role. Remember, if it is not sustained, the economic recovery and growth plan, the market is going to be affected, because part of the role of the ERGP is to try and mobilize not small money, 20 billion US dollars into the economy for critical infrastructure. That is one. Second, the role of government. Government has to carefully look at the critical infrastructures, including security. There you have highlighted in the report this afternoon that the power generation has dropped with about 1,000. Investors will never be happy with that and will never be encouraged. This type of information has to be changed. We want to see how 2,000 megawatt is added. When that one is added, the confidence is being built. But and the players also, the behavior of investment. Many investors wanted to invest where they can take much benefit quickly. So there is need for investors to encourage the critical infrastructures, that is one, to also encourage the sectoral development of our economy, that is potential in agriculture. There is need to open bigger windows in this market so as investors can bring, so that we can generate more financing in the long term, and at the same time create more jobs.
Thank you very much, Mr. Yushau Aliu, for your thoughts today on
Thank you, Moflang. Thank you.
All right. So the month of March is showing signs of positive strides as stocks recovered from grounds in early trade. At the close of the day's session Friday, the all-share index appreciated by 0.34% to close at 31,827.24. Now, world markets were lifted Friday by suggestions that the U.S. could endorse a trade deal with China in the coming week. Let's join Bostede Abel with an update.
Global stocks started the first day of March mixed. Stocks in Africa were mostly mixed. Ghana's GSE Composite Index and South Africa's JSE Africa Top 40 opened trade positive, while Nairobi All-Share, Namibia Overall Index and Tunisia's Tunidex opened red. European stocks opened higher Friday, beginning the first trading day of March on a positive note. DAX topped 1.16%, FTSE 100 0.62%, and CAC 40 also opened positive by 0.74%. Asia markets saw gains on the first trading day of the month after soaring in February, with the Shanghai Composite seeing its largest monthly gain in almost 4 years. The Shanghai Composite advanced 1.8% to close at 2,994. The Hang Seng Index edged up 0.63% in its final hour of trading, and Nikkei also appreciated 1.02%. In the United States, Dow futures jumped more than 100 points after strong growth data indicating a positive open of more than 104 points. Futures on the S&P and Nasdaq Composite Index were both seen slightly higher.
And now for a look at the money market. How much is the Naira exchanging for other international currencies? The economic diversification policy of the federal government is to be strengthened in the second term of President Muhammadu Buhari-led administration. Minister of Agriculture and Rural Development Audu Ogbe says the administration will further push the country to be among the world's largest exporters of agricultural produce. The minister was speaking with agriculture correspondent Musa Babaliu.
One of the dangers facing Nigeria has always been rapid changes of policy. This means continuity. It means that the farmers are going to continue to receive attention from government. It means that wealth is being slowly but steadily transferred to the rural areas. It means that importation of food will continue to reduce. It means that rural farmers, and mainly rural farmers, including big-time farmers, are beginning to enjoy the market which belongs to them, meaning the Nigerian and West African market. So for farmers, I think it's a moment of excitement, especially people in rice, cassava, and so many other products.
Nigeria's maize output increased to more than 20 million tons at the end of 2018 cropping season. To this end, Maize Farmers Association of Nigeria says Nigeria is now ready to start export of the produce.
Tons, which the highest demand for maize is from Poultry Association, and their demand is only 8 million tons. The remaining 12 million tons is going to the other food processors and the other human consumption. Therefore, the total demand for the human consumption and the other food processors will not be more than 6 million tons. So therefore, there will be an excess of our production so that we can even provide or supply to other neighboring countries. Because one of the major targets in Maize Association is start exportation of maize in Nigeria, from Nigeria to other countries.
Gold prices settled at a 2-week low, giving up earlier gains in the wake of an abrupt end to the U.S.-North Korea denuclearization talks. Let's take a look at prices of commodities. And this is where we wrap up this edition of Business Express. Be informed that all previous episodes are available on YouTube. Remember to join us Same time, same station next week, Monday. Until then, I am Muplang Dakok. Keep thinking and doing business.